Day 4, Santa Claus Rally. We have quite a few stocks here in the green, but maybe not that get up and go we were looking for. Did Santa put the reindeer before the sled with that big rally earlier in the month? Well, we'll find out. As we said, a lot of stocks are in the green here. China stocks looking perky. Gold and silver fighting their way back. USO looking strong. Crude looking strong as well today. Micron being the beast in beast mode. We'll cover that. We'll cover other stocks on the move. And we got a new guest for you at 8:35. One of my former oldie colleagues, now working with Mark Chaikin at Chaikin Analytics, Pete Carmasino, Chief Market Strategist at Chaikin Analytics. We're fired up for today's show. I hope you are too, folks. Let's get it going, Brent.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, we are flattish here, down just a couple handles, 69.52.75, just range bound the last couple days here of the trading year. Buck flat, 97.76. TLT down 42 cents, 87.65. USO up 62 cents, 70.23. Gold and silver after crazy days yesterday, back on the rebound. Gold GLD up $6, 404.64. SLV, the outperformer, up over $3, 69.13. And once again, Bitcoin here in a trading range. It's up today, $810 at 88,370. These charts are brought to you by TradeStation. Chart, analyze, customize, all-in-one program platform. Get your trading signals to act the way you want to. Create your own indicators with TradeStation. So here we are on a frigid Tuesday morning, at least here in the Motor City. We can bring in our resident trader, Triple D.
Yeah, very cold. Morning? About 8 to 10 inches of snow on the ground here and very frigid. So we're flirting with being like 15, 20 degrees below freezing. So it begins. You know, new year coming. Winter's going to be starting. The Brentster's kicking around in the background. Let's say hi to him as well.
Good morning. How's it going?
How goes that? Are you staying warm?
I look at how bundled I am. Yeah, I have a nice sweatshirt on underneath and like my nice zippy that I got from my dad.
He always looks good. He's always styling. You look over at the Brentster, and then
you too, though.
Wearing hoodies and t-shirts. So I need to get a little bit more style to my game here. Stocks. Yesterday, obviously, with the big sell-off in silver, that was kind of the story of the day. We had sell-off in a lot of other momentum names. You know, it was kind of like not that great of a day for the markets overall. Although, you know, the SPY, kind of rebounded towards the end of the day. Today's morning is an interesting one because we're getting a metals rebound. Gold, silver, up substantially. We're getting a rebound in China stocks that got beat up yesterday. They're all up, not substantially, but they're bouncing a bit. You're seeing some momentum names bounce up a little bit. And I'm like, majority of stocks are up. And then you look, S&P's flat, down. Why? Micron's up again. We can talk about that, up another $2. Had a great
let's talk about that for a second. Well, Sure. It's never too late. Someone asks, is it too late to buy Micron? Well, it's never too late if you have a good risk-reward ratio. I mean, a couple lows in the same area here. Let's just call it, 278. You got a pair of lows from, let me figure out the days here. That would be Friday. Friday and Monday, or it will be Wednesday and Monday. So yeah, why not? $10 away. Maybe got that 300 on the mind. Never too late to buy something if you're willing to, employ a good risk reward ratio. A little bit too high for my taste, but hey, if you're quick, you're nimble, why not play the momentum?
I mean, I would stop myself out under the 278 low from yesterday. So the only thing is you're risking 18 points at this point in time. But if you were coming in here, buying it now and saying, I absolutely have to believe this, I believe it's going to be a huge story in 2026. What I will say, and I've been saying this, is often leaders become laggards become leaders. in the first week of January. We are 2 days away from the first week of January. That doesn't mean it's today. You don't want to get too early on this trade because right now, today, if you're Canadian, is actually the last day to take tax losses here. Tomorrow, if you're American, because Canada works on settlement date and US works on trade date. So keep that in mind. A lot of things change. So if you were sitting on huge profits in Micron, it's had a hell of a year and a hell of a run. You're probably maybe thinking, I want to wait until, Jan 1, which will be January 2nd, because we're not open Jan 1, to take those profits. So that's why I think you often see this leaders to laggards, laggards to leaders theme. It's tax oriented. Laggards are depressed because they've had tax loss selling into them. Leaders, have had the lack of selling because people don't want to take the profits. So you often see reversals. So keep that in mind. It's from a seasonality perspective. Micron, you got a day or two left if you're playing pure seasonality, and then you probably see some type of sell off. No, nothing works 100% of the time. Maybe it just continues. But it's a likely candidate to be impacted by the January effect. Stock has almost tripled. It is also very cyclical. Don't get suckered by looking at PE multiples and saying, oh, look at all the money they're going to make. DRAM prices go up and down. RAM has just been flying. Memory, Brentster, you've been talking about this, has been flying high. So SanDisk, Micron, WDC love that. They are cyclical businesses. Sometimes pricing comes down, and then those companies don't make as much money. So just keep that in mind when you're chasing Micron here. It's never been a great idea to chase Micron long term. So I was in it for a bit, sold way, way, way too soon, had no idea it was going to have this kind of move, which is historical for the stock. So I would just say at this point in time, I'm out on this one. So, but again, to Joel's point, you can trade anything. Just know where your out is.
Yeah, and I think that the final thing I would have to say on this is really, you get moves in stocks or commodities or whatever, but there's always periods of consolidation, right? And you've had a couple different periods of consolidation. I'm looking at the upper right chart here. I'm going to make it a little bit bigger. And you've had a move up, to 200. You chopped around a little bit. You had another move up. You chopped around a little bit. A big move up. Little bit of consolidation, broke down. So look for the consolidation periods and then move out of those consolidation periods. But right now, that support is building, and that's $16 away. Where's the resistance? I can't give it to you unless you get 1, 2, or even 3 highs. 3 highs in the same area. Jay's mentioned call buyers for 300 next week. Well, that means there's call sellers for next week too. So for every buyer, there's a seller. That's it for me on Micron.
People asking about the January effect. So if you go and you probably ask Gemini, and let's just do that right now and just see what they say, because there are multiple January effects here that people talk about. But okay. I think they're going to give you the small cap outperformance. So January effect, if we ask AI, is the theory? Yes, exactly. And this is not my January, but it's the theory. Historical market anomaly theory suggests stock prices tend to increase in January, particularly for small cap stocks. That is the typical January effect. The small caps tend to outperform in January. That is not the one that I use. I usually talk about more so tax loss selling and impacts of leaders to laggards, laggards to leaders. So, just so if you're going textbook there, they talk about small cap underperformance and tax, obviously tax line has something to do with that small cap outperformance as well. I think you might get that again. So I'm not discounting that's not possible, but it's not what I'm really focused on. When I'm putting together these lists, and Brent and I have been putting together a January effect list for the better part of 2 weeks here now. The number one stock, and we'll give it to you on our January effect list, and we talk about these all, everybody in the Stock Trader Network room knows this. But the number one stock that I've got on my list for January is Trade Desk. I think it's just had the living crap kicked out of it. Probably has been, under pressure. And I think there's a potential for a stock like this to bounce in early January. Does that mean I'm investing in Trade Desk and this is going to be in my 2026 acronym? No. But does it mean there's a trade there and a setup early January? I think it's possible. So I also think the recent strength is people actually front running the January effect because other people have been talking about this stock on social media. So there's some that are, wishy-washy. This one kind of is a little bit, nothing's a clean setup. The strategy in itself is purely contrarian. I mean, you don't get more of a contrarian strategy. Let's go into January and buy all the worst stocks from 2025 and short all the best stocks from 2025. I mean, momentum traders would roll over in their grave, talking about stuff like this. So it is not, for any means, like a risk-free strategy, probably a very risky strategy. But overall, I've had some pretty good success doing that. So, and again, sometimes you can wait, and let's just wait till January 1st and see if we start to see that in the morning. See if we start to see this actually happen. Or does it happen overnight in the Robinhood session and you don't get them? I mean, there's lots of considerations here. But think about your S&P stocks. And again, it's more pronounced on names that are widely known. So you can think about like stocks that are really been depressed. Nike. I think Nike sets up, I think a lot of good things are going on with Nike with the Tim Cook bottom. So I think there's that potential, this chart's starting to look a little bit more like it's trying to bottom here. It's got Tim Cook just took a position in it. And you've got seasonality maybe working in this favor because Nike has been, a perennial loser every single year. Doesn't mean I'm taking all my investment dollars and now selling my NVIDIA and buying Nike. No. But does it mean there's a trade set up here for Nike into 2026? Yes, I think so. Full disclosure, I am long some Nike here right now. So that's where I'm at with Nike. I think that's another one that has a potential. Lululemon, I think, has potential. I'm long that one too, full disclosure. So I think, just having a list, and I have about 50 stocks on this list, is a good idea. And then going the other way, I think the memory names are prone to maybe taking some sell-off, maybe a Micron or a SanDisk, maybe have a little bit of weakness just starting the week. It doesn't mean those names runs are over, and it doesn't mean that they're going to be like the worst stocks of 2026. That's not the case. It's the January effect, not the next year effect. So this move that often happens usually lives for a week or two, maybe a few weeks, and then sometimes, peters out. It doesn't always have to do that, but, that's what we're talking about when we say January effect.
The chat really bit on this one, the January effect discussion. We have a few good ideas here, I think. And Dennis, just as a way to potentially provide some contrast to what you're saying, let me bring up a few of them. Jackie asking about ServiceNow, NOW,
Yeah.
Costco. Steve Alexander says Costco.
Yeah.
NVTS, ARM, for example, from F. Vanderkrat.
Sure. A lot of these themes. Now, one thing I would be cautious with, because we've had an overall 2025 theme of AI. I think 2026 is going to be full of AI too. I think it's going to be the physical AI year, where we talk about humanoids, robots, and more obviously, in industrial, businesses, employing it. To Tommy Lackey's point, businesses, actually benefiting from, cost effectiveness of employing more AI. I think we see a lot of that. So I still think 2026 is going to be a huge year for AI. But because 2025 was such an AI year, I don't know if I'm like really jumping at the technology stocks for the January effect. I kind of am more in the value camp for the January effect. But again, you're showing beaten up stocks, which these ones could work too. I mean, ARM Holdings here you've had this AI rally of AI rallies, all year. Look at ARM in the last 2 months. This has been an absolutely incredible sell-off. Nobody's talking about it. You don't see them talking about it on CNBC. This is stock, which was supposed to be one of the darlings, the NVIDIA's right-hand arm, went from $183 2 months ago to $110. It's down 70 points. You're talking about over a 40% fall in the last 2 months. It's significant. This is not alone. We've talked about some of these momentum names with these nosebleed valuations, and ARM has been a nosebleed valuation the whole time, trying to stand up, but they haven't been able to. The last 2 months have seen PE contraction on the nosebleed names and PE expansion on the really low PE names. Take the opposite, like a General Motors, and we've been talking about that. $55 2.5 months ago, it's 83. So if you're not paying attention, you should be, because we've been talking about this for the last couple of months. And low PE is cool again, and high PE is not. And there's two stocks, which General Motors trading at 5 times earnings 3 months ago, and ARM trading at 100 times earnings 3 months ago. Gives you a clear example of that this market has moved from high PE stocks to low PE stocks.
11 out of 12 loot down days starting on December 9th when you closed at 141.93, making the low close of the recent move on Friday at 110.27. Of that one outlier, that one up day was on December 19th and it was up 54 cents. So you did get a green day yesterday when you made the low, the old undercut the 110.10 low, hit 108.38, and you came back above that low, trading back down 24 cents today. But stocks, markets, commodities, we all know how streaky they are. This is maybe in the process of trying to break a major losing streak. So there's your
And maybe you
technical.
want to wait to see some life. Like you come in here and say, look, I believe in AI and ARM Holdings going to be a player here, and I'm just going to randomly buy the dip. SMCI going to the same camp. It's been giving it all back. Obviously the counting issues were the issues earlier, but we haven't even heard anything about that. But stocks leaked away all of its 2025 gains too. So I mean, this is not just ARM. This is a lot of those smaller AI names. And you can say, well, look at Micron, Denny. What's Micron got, folks? What's the biggest thing for Micron, especially with RAM prices higher? What's it got? A low PE. It had a low PE. So you can't say this has not been the AI technology rally. This has been the low PE rally. This is what we have seen in the last 2.5 months. Micron, SanDisk, they have the low P's, and yes, they're cyclical. So, it depends on DRAM pricing. But right now, at this pricing, these stocks have a low PE. Now, nothing works, obviously 100% of the time. But if they're just taking and saying, I was going to, 2 months ago, short all these stocks with these nosebleed PEs and buy all these stocks with these low PEs, you would have killed it. If you would have did that trade a year ago, you'd have got killed, though. So timing this trade is critical because it doesn't always just work. But, I mean, we have been on the comeback trail here for so many stocks with low PEs. Micron at one time is trading 8 to 9 times earnings. So now if you look, it's a little bit, higher because it's run. But I mean, the earnings of DRAM price have come so much, memory's come up so much that the stock actually doesn't look expensive still when you compare it to, where, the profit margins are here. So keep with that theme. Maybe that theme continues in 2026. Maybe it peters out. We have seen, these value rallies before, and they have fooled us before. So it's not necessarily like for sure that 2026 is going to be the value year, but we're going in with a lot of momentum for low PE stocks.
I still see Micron's forward PE as like 9.5. That's crazy to me. Western Digital PE is about 23 forward PE. Seagate right around there too, and then SanDisk is like 20. These are very low. I didn't realize that.
Yeah, and they were low the whole time, but they can't keep up because memory has went up so much in price.
Demand.
And they're commodity based, they're just selling memory. So with that going up, they look attractive still. So, that's why Micron looks a hell of a lot different than a lot of these other companies. And, you can go through, I can take looking charts, but we are seeing a theme here, which we have identified 2 months ago, that PE is starting to matter. I don't know when. Remember I was saying like a month ago, PE is cool again. Low PE is cool again. Valuation, CFA hat on is working. The CFAs are all smiling right now. Now, again, I worry about a stock like Micron because, again, that business, if RAM prices start coming down, that PE starts going way up because, it all matters. But if you believe in AI, probably going to need a lot of memory. So maybe this rally sticks. It's possible.
Go ahead, Brett. I'm sorry.
There was a good question by Leo Caster a little bit earlier. I'm scrolling up trying to find it, but basically they were like, oh, here it is. Micron is cyclical or was cyclical? Not sure these days. And like, it's kind of an interesting question, I think.
Yeah, if the whole world's just going full AI, we need so much memory and everything here. Maybe this business, I think it's cyclical, but maybe this period lasts a hell of a lot longer than some other periods. You could argue that too. So it's a good point. Right. It's a good point.
Right.
Am I chasing Micron here? No. Do I think I'm going to get another chance to get back in a cheaper price? Yes. Do I think I'm getting at the $110 price that I sold it? When I took it from 80 to 110 and said good trade? Me, I always get out too soon. Entries are awesome. Exits are way too soon usually. This was one I definitely exited way too soon.
You know what you need to get to even get seemingly bearish on Micron? And I'm looking at it's not super widely covered here. You need a lot of crazy price target hikes. That's what you need. You know,
The
like
analysts are scared to they
they,
know how this has went before though. If you look at the historical chart of
yeah,
Micron, you can see at the bottom there are lots of moves, nothing this big, and then there are lots of subsequent sell-offs here because it's a cyclical business. So, but this move is look at the move. Like this looks nothing like the other moves here. I can't remember Micron ever having a 200% move in 3 months. I don't remember it ever happening. Maybe in the tech bubble in 2000 because everything went nuts, but it's been a very, very long time. We're in nosebleed territory, but that doesn't mean it can't continue. I was, scared to buy it 50 points ago, and it's continued for another 50. So, I don't know, but I also know seasonality sets up that leaders to laggards, laggards to leaders. People sitting on this might want to book some gains January 2nd. I think there might be a short opportunity early in the year. Is it going to stick? Is Micron going to be coming, and giving it all back? I don't think so, but I don't think I'm chasing this either on December the 30th.
okay. All right. Just looking at Micron, just looking at the pre-market action. A lot of times you can get a key, and I'll just give you the 24-hour market. What did you hit? You hit 297.84. So that's the only number I can give you. Trading real good volume here in the after hours. And then the other thing to keep a close eye on this one, all-time closing high is always a good level. May very well come into play today. 294.37. That's your all-time high mark. And that was an all-time high mark by nearly $8. So maybe if you see like a new all-time high by only $2 or a scratch day, maybe there'll be a little bit of weakness. But right now,
and maybe you want to start with that weakness. But again, you don't want to get caught because yesterday morning it looked like, well, maybe we've got that weakness here, and they turned around and bought it right back. So we had a trader in our STN room that went short and then turned around and went long and actually turned a losing trade into a winning trade just by reversing the position. So, I mean, you can't fight the market. We always say you can't fight the tape. And just because your thesis is that Micron's going to end up being weak in January doesn't mean it's going to materialize. So you always have to have an out. I mean, again, nothing works 100% of the time. We're looking for edges that are 55, 53, 52. Jim Simmons' long-term edge was, I think, like 2% or something ridiculously low. He's one of the best traders of all time. So as traders, we live in the probabilities, not the absolutes. Back to the news front here. There is some deals. There's some other stuff happening. I want to go to Baidu. I don't want to go to the China stocks, though, because these are fun to talk about here. We didn't fully cover China yesterday, but I did buy a new stock in my long-term portfolio, setting up more so for what I believe is going to be an EV robotics year. I bought XBEV in the long-term portfolio yesterday morning live in the Stock Trader Network room. Bought it on the open. I'm happy to see that one rebounding. But, I was talking about lots of cup and handles and lots of these China stocks. I don't know if it's that much of a cup and handle pattern XBEV, but lots of the China stocks do have these patterns. Baidu, nice key reversal yesterday off its cup and handle. Baba, kind of want to add more to my Baba, although it broke down a little bit yesterday. But let's go to Baidu first. We can talk about the XBEV purchase after. But Baidu is announcing a deal this morning, and I'm long Baidu in my long-term portfolio as well, with Lyft and Uber. So Baidu is going to be a huge player in autonomous drive, and in other things as well. So here they are partnering up with Uber and Lyft. That's a catalyst. Stock's up $6 here this morning, and looking pretty good on the chart.
Yeah, quiet consolidation, after, a little check back. You can use your 50-day, and right now we're a ways above it. That comes in at 122, trading up $6.50. Let's just look a little bit longer term here, because Dennis is looking at this as like a longer term play. And your next monthly high doesn't come in until 149.51. That was your high back in October. Super long term. I mean, we barely have traded over 160 since 2023. So some room on the upside. 1, 2, 3, 4 good months, 2 not so good months, and reforming a base here for Baidu. And I thought there was. I read also some news in China that they did some measures to boost consumer spending and the economy. So that's good.
Well, and all these stocks had very weak days yesterday. You know, China was very weak. It was one of the things, and this is kind of a bounce back day. But I mean, again, to the low PE theme here, which somebody was just mentioning. I mean, these stocks all fit that bill. I mean, Baidu PE. Let's just go for fun, because right now we've been talking about this. Low PE is cool again. So just doing your quick scanners, whatever the hell you use, going in and looking at these things. Baidu is trading at 11 times earnings. 11 times. It's in autonomy. It's in everything. If this company was if Baidu was in North America, it'd be a $250 stock. It'd be twice as high. But because it's in China, we know there's a lack of, interest really in China names, but it's starting to get more interesting. Baba, 19 times, 16 on a forward basis, still pretty darn cheap. Just continuing on this theme, we can go to XPEV, which I bought yesterday. Now XPEV forward is 45 times. They're still trying to turn profitability really here, which they, as analysts, and I was reading some commentary, believe that within a year to two, and within 2 years, this company can make $2 a share. That would mean it's 11 times if they can get to those numbers. I don't know if they can. Again, people will say, oh, they don't use GAAP accounting. What can you believe? I mean, that's always the risk of investing in China stocks. And the biggest risk is there is some testing going on around Taiwan right now. I mean, the geopolitical risk is real. And that is why these stocks trade with suppressed valuations. So maybe you just want to stick in North America and do with what you know. But I'll tell you one thing is, if Taiwan gets invaded, your North American stocks get hammered too. Everything gets hammered. We gapped down 10% that day. But we hope that doesn't happen. JD.com's another one. I have this one in the long-term portfolio as well. I own all these stocks. Pinduoduo I do not own. You just went to that one. But, low PE, there's a lot of low PEs over in China. There's a lot of low PEs in a lot of, areas here. PE on Pinduoduo is 11, 9 times forward. JD.com was always one of the really cheap ones. Let's go look at JD. Yeah, 9 times earnings on JD. Forward PE is 10. So you don't have to go paying 30, 50, 100 times if PE remains cool. And that's still a big question mark, because story trumps all. But if this gravitation to lower PE stocks continues into 2026, I think China stocks set up really well.
And also, and this is just going more broad here. I mean, where's the rhetoric? We haven't heard much rhetoric lately, right? We haven't heard much talk on tariffs. We haven't heard much tough talk on China. We haven't heard much, it's just been kind of quiet here. So as long as that, that's definitely a favorable headwind. Of course, a Trump tweet or a truth or something could change things, but haven't heard that as late, and really on the entire front here, we really haven't heard much. So, of course, we know that had a lot to do with the price action and equities and commodities in 2025. So, just factor, always something to keep an eye on here.
I believe that somebody was just saying that Buffett doesn't own any China stocks. I think they have a position in BYD, don't they?
I'm pretty sure. Yeah, I can. I'm
just going
sure
from memory. I'm pretty sure they got a pretty
Yeah.
big position in BYD.
Let me look right now.
I think it's part of the reason why I bought BYD, and I'm in BYD too. I'm in a lot of China stocks.
I don't believe that they sold out of BYD last quarter, but I am going to look right now.
Okay, we'll have Brentster look that in the background. They don't have a pile of them, but some people are saying not anymore, that they've sold it. Maybe they did sell it.
Actually, yeah, I do not see it. I'm looking at the filing right now. Let me just triple check. I do not.
They're saying it's sold it. The chat's pretty good. It's all over it. They sold it already.
Not in there.
Yeah.
Where Buffett is big is these Japanese trading firms, trading houses. It's big bets. Like in Mitsubishi, Mitsui, Sumitomo. Probably butchering the names on these, but yeah, it has a lot of exposure to the Japanese trading houses.
Let's talk about Buffett for a second, because people are asking, what is Buffett buying next? I'm going to tell you nothing, because Buffett is done. This is the last. I believe it is official here, like in the next 2 days, that Buffett.
Oh yeah.
Is officially retiring. So
yeah, December 31st.
December 31st. So Buffett has 2 days left if he wants to make a last, exciting buy. You know, he wants to get one for the road. He better do it in the next 2 days, which we will find out because, you know, you lag 2 days there too. Well, you can lag even further. That's not true. If it's 13F, you know, you can lag. If he's over 10%, it's got to be disclosed within 2 days. Otherwise, you get the whole quarter. So we may not find out. Maybe we're going to find out some more things that Warren Buffett bought. Would be February 15th, Brent? Would that be when the last data report for 2026? Is that correct? We're doing the math right?
Yep. Yeah. Yep. You got it.
So that's something to think about. But, you know, what is Greg Abel buying? That's what we're going to be asking. We call him new guy, but let's give him a name because he had a pretty darn good pick, you know, with Google, if he did pick Google.
This day here, just the chart is kind of as indecisive as we are on this. This was the day that they announced earnings. I believe was that when it made the no. When did he announce that? It was a while. It was longer than the end of December, right? I probably have to go to that's on the daily chart because we're way off.
Do you think, Joel, while we're talking about Warren Buffett, what are your thoughts technically on the stock as we enter a new era here? Is there going to be a Warren Buffett hangover here? Like, could Berkshire Hathaway, which I've been arguing for value stocks in the new year, Berkshire is full of value stocks, but I'm a little concerned on the Berkshire Hathaway value because you look at it and, you know, it does trade a little premium to NAV. I mean, it's impossible to figure out NAV because half the companies are private, but, you know, you can figure out that it probably does. Does that come out a little bit here? Do we get a little bit of a hangover? We saw it with the official announcement. You know, Berkshire Hathaway was depressed for a little bit. It's bounced back. But now that it's official and, you know, we get to the new year, January, is there a January effect on Berkshire Hathaway of having no Warren Buffett?
Boy, it's bunched up. Let's just call 500 that like the area. You got the moving averages right below this area, 490, 50 and 200 just bunching up together. And then it's halfway back of that, you know, that all-time high move that it made earlier in the year. And it made its all-time high on the day they announced earnings, that it was at his meeting. He announced that it was stepping down, and you had the Warren premium come out of it. You come all the way back. I think I think the street is as indecisive as we are. I think it's just holding 500. If it builds a base at 500 here, you know, I'm looking for maybe work its way back to all-time highs. If it loses these moving averages here, it can't clear 500, then, you know, don't know if we go back and test the low of the move, but certainly has not been participating in the recent rally. Just kind of, and even shorter term on the dailies, you got a triple top here at 501.50. So a lot of setups here right around the $500 area on Berkshire Hathaway.
Okay, so our guest is in the background and waiting, and I don't like to keep our guests waiting here. So if Pete, if you're ready, give us a thumbs up because we're going to bring you on here. He's ready to go. Double thumbs up. I love it. Okay, Brentster, run that intro.
Okay, folks, this is going to be a good one. This is Pete Carmasino. He's a chief market strategist at Chaikin Analytics. We all know Chaikin Analytics, but if you want to go back to the old days, this guy was an oldie discount back in the day. Commission-free trading. Where did you hear commission-free trading, Pete? That's a new thing?
I don't know. I mean, I was shocked. I thought we started it. I mean, you know, but we had some minimums that you needed, but pretty innovative, and nobody liked it when it came out. Everyone else was against it, and you know, all the competitors thought it was a gimmick, but turns out it was the future.
Yeah, and there was some sharp cookies, man, they had their Bloombergs back then. They were traded in the news before it was the news here. But Pete's role over at Chaikin Analytics, he's the chief market strategist here, and we've had him on Stock Trader Network. He's given us a good outlook on the market. But let's just talk about, you know, like the 2-year cycle here, right? We got a new president, right? We've had a good year. Some people are saying, oh, it's a midterm election year, we just can't keep going. And others are saying, hey, ride the momentum higher.
Absolutely. I mean, you know, I was never a big fan of history until I got older, right? So I just started to look back, and all of us do this, right? We look back. We want to see what setups work. We want to see what our technical indicators say. We want to see what our fundamentals would have said a year or 2 years ago and how it would have played out. So I just had to kind of dig into this and figure it out for myself. I went back and I used the data from Robert Schiller. It's available. There's a website you can find it. It's a free download. He gives it away for nothing. And they basically create what would be an S&P 500 type proxy, right? It goes back to 1871, and I just looked at all of the midterms between that time period and 2024. Post elections, an average about 8.7, midterm about 8.3, and pre-election about 11.9, and typically the last year is only about 7%. So based on what I found, it's the last year, again, using all of that data, proxy type simulated data, that says it's the last year is typically the worst, which is another, an election year. But we haven't seen that recently. So I had to keep going and kind of see what, is this a real phenomenon, or is it just sort of something that's people have used to say, it's a great talking point, it's a great marketing point, whatever it might be. And I started to just kind of dissect it a little bit further. I'll get to the point real quick. If you got to go back and look at the pro-business administrations to really get a strong handle on how the midterm election years are going to play out, specifically because of the one big beautiful bill, again, reconciliation bill, whatever you want to call it, the Act OBBBA we talked about last time I was on, Joel. And, you got to see what's going on. You got Coolidge and Harding, you've got Reagan, you got Trump 2.0 here. And that basically gives you 5 midterms to look at that are super pro-business sort of administrations. And you really get a way different picture when you do something like that. So if I look at that and I say under those aggressively pro-business administrations, 4 out of the 5 years are positive. The Trump 2018 year, when they started to raise rates at the end of the year, really sold off in the last 3 months. If you remember, the market was up about 12 or 13% moving into October. And then that last quarter, it just dumped. We finished, I think, down about 4% or so. But the average return with that loss was about 14.4%. So to me, I'm looking at sort of the tax incentives, all of the capability that the one big beautiful bill allows for CapEx spending, 100% bonus depreciation. And it's not just tech. You're starting to see the rotation, and the sector rotation is obvious right now.
Yeah, let's go into that. The lifeblood of this market, rotation, right? We were just talking about, value in Berkshire Hathaway and growth stocks, and always the changing of the guard here. So let's talk about, in particular, some of these diversified cyclicals that are in play for your perceived economic expansion here in 2026.
Yeah, I think, it's people are going to, and you guys were talking about it earlier, we're always looking for an edge. We're always looking for something that's trying to triggering or sort of signaling us into the right direction. And for us, we follow sort of the index sectors based off the spider sector ETFs. And right now on our system, the top 4 are financials, industrials, tech, just moved into third just recently, and then discretionary, consumer discretionary, believe it or not. And so for me, tech obviously has sort of handed off the ball to financials and industrials here in the last, since the mid-November or so. You see tech down about 3.5%, and financials and industrials actually moving better. So I'm just looking at really sort of the obvious trends here, and it's financials and consumer discretionary. However, and I really don't ever have this sort of in my wheelhouse. In other words, what I mean is I rarely see this particular sector moving into under my radar, and it happens to be pharmaceuticals. And so I had said, back when we talked before about equipment companies, medical equipment, medical device equipment, starting to kind of catch a bit of a bid here. If you look at a company called ICUI, that's ICUI Medical, that stock has just made what I call sort of a turning point change. But it's because you've got these equipment sales that are obviously starting to ramp up. They're going to get the 100% bonus depreciation. So equipment in any sort of industry is probably going to benefit. So I just went back and looked, okay, we got financials. What's the driver here? Strong earnings continuity, AI in their operations, easing rates and boosting lending. So you've got really a triple barrel, approach here from financials. But you still have policy uncertainty. Yet, don't forget, in the One Big Beautiful Bill Act, they cut the Consumer Financial Protection Bureau sort of aid by 46%. So deregulation there, or less regulation, I should say, is going to open up sort of, I think, a little bit more innovation and certainly an opportunity for us.
Sticking with the financials here, we'd like to separate. You got the big banks, you got the regional banks. Let's just talk about the regional banks here, and they seem to be the one that may, benefit the most for some interest rate cuts here. Just talking regionals here. Do you have any particular or particular regions of the country that you favor in this sector?
Not necessarily. I mean, look, we've got. I think we have too many banks in this country, right? We've got like 4,000 banks or something, but plenty of people to serve, right? I mean, and there's always competition there, but it's the sort of the larger banks that I think will benefit. But there's some large regional banks like a PNC, right? I mean, PNC is national, but it really is a large, gigantic regional bank. They got a massive wealth management division, huge in the 401k area. And don't forget, again, back to this tax incentives and things that are happening. The Trump accounts, right, have just been announced. It's going to be, it's sort of a tax advantage savings plan for kids under 10 years old. There's a lot of details about it I won't go into, but that's going to open the opportunity for custodial services from other regional banks as well. I would think it's going to be the larger banks, but I'm probably, guessing that some regional banks will be involved as well. So I just think you've got, an excellent opportunity. What do we have? A few days away from, more tax incentives down to the individual level, right? Social Security is going to be tax less, no tax on tips. And there's other, areas of that bill I haven't gone into deeply, but the fact right there, that matter is that's going to help boost not only financials, wealth management, lending. You free up some income. Your payment affordability goes up. Now you've got that, but you also have consumer discretionary. So to me, we've seen the consumer carry this market in many phases and business cycles, and we're seeing it again. And don't forget, those tax cuts that were being sort of made permanent from 2017, you've got this wealth transfer that's happening. This is enormous. If you know any baby boomers, they are helping out their younger sort of, when I say younger, they're 30, 40 years old, 50 years old in some cases, their children by basically gifting them money under this amazing exemption level now that's made permanent. And that's turning over. Velocity of money is increasing. So that helps financials and consumer discretionary hand in hand.
I mean, lots of considerations here as we go into a new year. And the stocks you're talking about are stocks we haven't been talking about for a couple of years. Although in the last month or two, PNC, a stock like that, has moved up a lot. I mean, everybody is still talking. I look at the 2026 picks and I see everybody's got the AI names all over it. Like you've got everybody focused and crowded in the same area. So it's interesting. And I love this conversation because I've been trying to say, actually, 2026 could be a year of catch up for a lot of different names. I mean, look at what is happening. You're talking about tax incentives and, the Trump administration. I mean, there is so many, other things happening too. Lower interest rates. We're going to have a dovish share, coming in, whoever it is, and it's going to get announced, Trump says next month, is going to be a lot more dovish than Powell. So lower interest rates are good for stocks overall. So I think, is there other sectors that you think might, we should maybe start, looking at, because we're all crowded in tech, but maybe 2026 is a year where it decrowds a bit and other sectors start to pick it up.
Yeah, I think you're seeing signs of that right now. I think you're seeing, as I said, tech is handing off the baton, so to speak, to financials and partially some of consumer discretionary. But there's some names that have really started to turn the corner, as you just pointed out, that have been sort of not left for dead, but just there's no money flowing to the stock. I mean, we know how that ultimately works. The raw data says, if you've got, have enough buyers, price activity is going to look negative. Look at Merck. Look at Lilly. Look at Bristol Myers Squibb, GlaxoSmithKline. These four major pharmaceutical companies look interesting. Now, I'm not a big pharmaceutical, I just care about trying to find the turning points, right? And find alpha in what I'm seeing on the screen. You guys know screen time. We've got who knows how many hours of screen time between all of us. And you've seen this before. And if you could take the symbol off the top, but if you could just see market cap, some fundamentals, and a nice technical looking chart, it's go time on some of these names. So I just think we're seeing it. We saw it in the memory stocks. You guys were talking about Micron. Look at Western Digital and Seagate. Micron, Western Digital, and Seagate are the top 3 performing stocks in the NASDAQ 100, but they started off of a downtrend, right? That turning point started in May, and it never looked back because they kind of had an inkling of what was going to be coming. I think pharmaceuticals, medical equipment, and from what I know, I've got a few industry contacts from doctors down to people who own, multiple practices and things of that nature. It's a slow process when you start to buy new medical equipment, right? The staff doesn't want to learn something new. It disrupts, your sort of daily operations. So it's a slower game. It's a long sales process, but some of these medical equipment names are starting to move. But don't forget, the pharmaceuticals, in my opinion, stand to benefit the most because they get an immediate tax deduction. Look at, I think Merck and Lilly, I'm not exactly sure. Merck for sure is involved in a new manufacturing facility in Delaware. That is massive for them. They get 100% bonus depreciation. They get another 35% deduction. So you don't have to be a CPA, and I'm not a tax advisor in any way, shape, or form. It's just sort of read the news and dig into it and understand it. Businesses act when there's certainty, and that's what's happening right now.
Pete, always talking about stocks with Mark Chaikin and entering points, right? Tactical turning points, entry points. I know you're part of Mark's team over there to catching the turn in the market. Dennis was talking about a stock, for the January effect, the trade desk, beaten up, coming off a low. It's turned. Talked about a few stocks that you're watching and what tactical turning points you're going to be using.
So I'm looking at the trade desk right now. It's an interesting, very interesting name. And there's a lot of names that look almost identical to that chart, but maybe a little smoother. This may sound odd, a little smoother on the downside, not so much gap on the downside. And, this stock got moved around because of earnings, and guidance was big, a big driver to the downside for trade desk. However, but if you look at a name like, here's one that kind of maybe more consumer discretionary, Decker's Outdoor. Check this out, DECK. This thing looks really amazing. It just turned bullish on the power gauge. It's a strong stock and a strong group right now. Beat earnings estimates on their last report. But this, if you laid the chart on top of trade desk, they look very similar, downtrend and starting to move higher. But to me, this consumer discretionary trade seems like it has legs. There's another one. This is a big name now. When I see these turns in like mega cap, large cap, you call it tech or software, whatever you want to say, this is a strong looking stock. It's Salesforce right now, CRM. Another one that has sort of rolled over during the course of the year, all the way down, I think, at 220 or so, coming off a 360 high. So these names look really interesting to me. I just assume that at some way there's some sort of creative accounting that can say a new Salesforce a generative AI or agentic AI feature could be considered equipment somehow. I don't know. People are going to get creative with the accounting, but software does fall into that area of a new purchase that serves for business purposes only. So you might start to see some activity in not just CRM, but all software. So it could be interesting.
Yeah, software has been really weak. We were just talking ServiceNow, which is in the gutter. And here's a company that's been run very well. Obviously, it was very related to Salesforce.com for a long time. But, a company that's come off its highs significantly. 2025 started the year up over 240, $154. Like its leaders, if you think any of that happens in January, this is a stock that may set up well too. But, software has been, the issue with software is a lot of people believe that AI is going to attack these businesses, that are reliant purely on software, the software companies here. True. So are you worried about that at all? Or you think we're just, these concerns of AI eating Salesforce's lunch, are unwarranted?
It's hard to say. I mean, there's certainly strength in the depth of knowledge that CRM has, right? I can't imagine that they don't have some sort of LLM themselves internally that they're basically using to thwart any attacks on their particular sort of their crown jewel, right? What they're good at,
Yes.
and they became, they didn't become big overnight. They became big slowly, but got recognized as an early leader in this, this changing of the guard, so to speak, from software being used every single day, every minute of every single day. But I think they've got enough bandwidth there to kind of fight off AI. However, I think the developer side is really at risk. I mean, some of what I hear people are using AI for is to develop software, but it is full of bugs still. So it's going to take a long time, I think, to get this perfect. And then what is that going to cost? Right? Obviously, it might cost less than a developer, but at some point, you make a software that does something, and I try to make the same software that does something a little bit better. Or how are you gonna monetize that? Our customers are just going to leave one company, go to another. The rotation of customers is going to be hard. So you have to find some way to retain them. And I think CRM has done a good job, right? They've made this the lifeblood of a lot of companies out there.
All right, Pete Carmasino, Chief Market Strategist at Chaikin Analytics. Pete, great session here. Really enjoyed having you on, following your analysis, and you're going to be a frequent guest here on PreMarket Prep 2026, as well as the Stock Trading Network. Thanks, Pete.
Let's do it. Happy New Year, everybody. Take care.
Thanks, Pete. I want to jump in. Dan Ives on CNBC last night. We know he came out with his 2026 picks earlier in the week. And, it's a lot of the normal names on there. It's got Microsoft. There was 5 big names. There's also some smaller names like IREN as well. He was on talking Palantir last night. He thinks Palantir can be $1 trillion company. He sees the stock doubling next year. Really, talking bullish. Why focus on a person like Dan Ives? Because 1, he's been right for a long time, but 2, he's widely followed. He's got the flash suits all the time. People follow this analyst. He's one of the most widely followed analysts on the street. So when he comes out his note, it's influential, whether you agree with it or not to be determined, but he's sticking with his AI theme. One stock that did not make his list, and they were asking about it, was NVIDIA. NVIDIA is not on his list. Not that he's bearish NVIDIA, but I don't think he was looking at other names as, NVIDIA. What I've been saying, it's up 1,000% in 2 years. Maybe time for NVIDIA to catch a breather. So I want to just talk, 1, I want to get your thoughts on Palantir. You can give me your technical thoughts on NVIDIA as well. And then he had some smaller picks I want to cover there too. But let's start with Palantir, because Dan Ives thinks it can double next year, thinks it's going to be $1 trillion company. And the relative strength on Palantir has been really incredible, not against the market, but against other momentum names, because you've got so many retail darlings. We were just showing you like ARM Holdings, and a lot of these other stocks are down 30, 40, 50%. Palantir sold off in November, but bounced back significantly after. So this stock, the leader, we could say is maybe the leader of the retail community, is still showing a lot of leadership here, despite some of those other stocks with higher PEs. Like we just gave the whole argument, high PE stocks have come down. Palantir has not done that. Palantir is saying, no, thank you. I'm not participating in the high PE sell-off and holding up. Yesterday sold off a bit. Thoughts going into 2026 with Palantir?
I mean, just short term here. I mean, this 180 level. I mean, if it's $4 away, of course, the stock can move very quickly. But I'm just looking, at the lows. Not so much the recent lows. You did have a little breakdown yesterday, but if you go back to mid-month here, you could just see the big boy stepping up at 180, a little bit sub 180. So keep an eye on that. It's $4 away. Consolidating up here near the top. Last week's high was 198.98. But to me, it's holding that 50-day. 50-day has been a pretty good indicator in this stock, going all the way back to mid-August. If you've been using that as an entry point and a buy point, and maybe a little bit of uncle when it takes it out, it's been a reliable indicator. So had a major winning streak on a monthly 1, 2, 3, 4, 5, 6, 7, 8. Took a little breather here, and looks like it's trying to regain its momentum.
I want to do one other stock here just before Brent starts getting ready to give our Hive promo or talk Hive, obviously, with us. SERV was a stock that Dan Ives mentioned last night, and he thinks this can be a major player in robotics in 2026. They are presenting at the CES conference next week, so that can be a catalyst as well. This is a stock that has, really had a rough go of it for the last month. It's been cut in half, 2 months. October is over $18 a share. It's back down to 9. They've got the little robots that actually serve. They serve robotics. You can see them. There's some cool videos of them out there. So if you Google it, and you can see the robots just going around, and they like serving. So they're serving robots. 2025 started the year 20. I think it sets up okay for a potential bounce back from the January effect here. Although I worry that all AI stocks could show some weakness just because it was such an AI year. But this is Dan Ives, like one of his picks as well. He thinks the stock is going to, do well in 2026, and they do present at CES next week, which can be a catalyst. So, thoughts on SERV from a technical perspective?
I saw one of these walk in. I was down the street in Florida, and I was with my niece, and she says, "Oh yeah, I see him around all the time."
Yeah.
And I don't know if they have like a speaking capability or something, but she was at a street corner or something, and I don't know if it like flashed a sign or actually said something, but it like asked her to push the walk button. So it could,
No way.
I don't know.
Oh, did it? It talked to her and said,
I don't know. I don't know if
reach.
that's
That's
true.
not
Danielle,
real.
are you
Did
listening?
you make that story up?
I don't know.
The poor thing's short and can't hit the walk button.
It doesn't have any
It's okay to
arms.
ask for help.
It doesn't have any arms. So,
I mean, they do Uber Eats. So literally the robot will, like, you get your order, and there are robots, in certain cities that actually show up and deliver your food.
This was the company that did the deal with DoorDash back at the beginning of October. Yeah, that was this company. Yep.
Yeah, so they're all over it. They're trying to just go, and it goes and it goes. It's pretty cool. It's a very, very cool concept, and they look kind of cool too. Like, fun to have these little robots serving, driving up to your place. It's not going to work up here in Georgian Bay Blizzard area. They ain't going to be able to get through it. But I mean, in South Florida, that's a pretty good spot for them to do this. So I don't know. It's kind of a theme. I do think robotics is going to be a huge theme in 2026, and I think you're getting ahead of it here. So I kind of like this Dan Ives pick.
It's 98% delivery rate, so I'd hate to be that 2% that got lost. But also,
where's the 2% go?
I wonder.
People are mugging it.
I saw one of these in boy, I wish I'm not great with phones and stuff, but I went to my niece's college graduation in Indiana, and this was pre-COVID, I don't know, 2017, maybe 2018. And we didn't really need a towel, but they had it in the lobby. So we go, oh, we need another towel. And then so we got outside the room and we taped it, and they came in and opened up and gave us our towel. But
nice.
We'll see. It's had a decline, trying to hold $10 here. SERV.
Should we say thanks to our wonderful sponsor, Hive?
We should.
Let's do it. This show, PreMarket Prep, brought to you by Hive Digital Technologies, a global leader in green power data centers for Bitcoin mining, high performance computing, and AI. Operating with nearly half a gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of this year, just a day or two away. On screen right now, there is a QR code in the bottom right corner. You can scan that to get over to hivedigitaltechnologies.com. There is also a link in the description of this video. Hive's been a great sponsor this year. We are very much appreciative for Frank and the Hive gang. Thanks to Hive Digital Technologies.
Awesome stuff. I mean, let's just talk Bitcoin just briefly here. Continues to hold. IBIT continues to hold that level. Support until it's broken, and this has got to be one of the most ultimate support levels here. I mean, I don't know where it coincides with Bitcoin futures because I don't look at them, but this IBIT here just continues to hug this 49 area. Has it been down here too long? Well, it's trying to bounce out of here again. So I don't know if it's going to pull a Lululemon and hug support for 3 months and then blast off, or actually eventually give way here. But again, January effect here. I don't know how many people are, sitting on losses in crypto. It's still done pretty well. 2025 is the best year for Bitcoin. It's slightly down if you bought it recently. I don't know if there's a lot of tax loss selling here happening, but there could be some of it holding it down. So it's a consideration for the January effect, although not as nice of a setup as some of these other real stocks that have really been killed.
Yeah, it ended last year at this is the futures, the rolling futures, 101,700. You peaked at 127K. And then this, I mean, you hit a low of just above 81,000, but 81 to 85. That's just been the rock of Gibraltar here. We know Mr. Saylor's uncle point is about 75,000.
Do we know that though? I don't know. They say he's got to sell at that point in time. But when you look at the leverage, and I haven't done my homework here, and we were talked about doing it, and then I forgot. This is what's been going around on social media that, oh yeah, if Bitcoin goes down here, he's gonna have to sell. I don't think we know his uncle point here, and I don't think it's as it's not like he's got to get out of it all. He's levered up to buy Bitcoin, so it's not like he's like, oh my gosh, we're bankrupt here. I mean, at a certain point, maybe they've got to de-risk a bit here, but it's going to take a lot to get Michael Saylor to roll over and admit he was wrong and start selling Bitcoin here. So I think he's not going to want to do that. So we'll see what happens here, but I'm not sure that uncle point is 75,000.
Yeah, and you know what? We have not heard a lot of we're the old conversion, we're issuing stock and buying Bitcoin as of late. That was several stocks of doing that, so that seemed to have cooled a little bit. Well, Dennis, second last day of the trading year 2025. Tomorrow, New Year's Eve day, we will be having Laura Chico on. She analyzes the biotechs.
Yeah,
which she's going to be happy to talk about some of those. A nice rebound in 2025. We will get her insights for 2026. So, folks, thanks for joining us here on the second last trading day of the year.